Hey, Alpha fam, welcome back to another episode of Alpha Commission. Here at Alpha Commission, I just want to go over the kind of a mixed bag on the stock market close today. As you can see, we do have a sea of red, but we also are sprinkled with just green everywhere. So we do see perhaps just a cycling of money into different, niches of the market. Of course, technology taking a little bit of a hit today as just investors take profits on the pretty much massive gains they've made on this pretty incredible near bull run. If a 20% increase in the stock market is a bull run, we have almost had 20%. I mean, we have like 15 to 19%, just depending on what you're looking at, which subsection, which indice, that sort of thing. But we have just had just some incredible growth, and so of course, profit taking is to be expected. The real question is this going to be a turnaround? And what we did see, of course, is that the initial jobless claims on Thursday, it wasn't that bad. It was pretty much met expectations. And the continuing jobless claims, like that was actually, it was a little bit higher than expected, but, pretty much in line with the previous one. And, jobs have been pretty good so far, so not too bad. The trade deficit actually went down. But today we actually found that jobs, these payrolls have increased dramatically. And this is almost double what was expected, which does suggest that there might be some job inflation still going forward. Of course, the unemployment rate actually went down, so the more people got employed. And this is contrary to what the Fed wanted to do. The Federal Reserve wanted to suppress job growth, and they wanted to just kind of clamp down on this, on jobs inflation, where, there's the corny saying like a two jobs for every one person available, but it's actually pretty true, and that's not sustainable for an economy that's been propped up basically by unlimited Fed spending. And of course, the majority of that money went to the big businesses and the ultra wealthy who actually used it to buy their own stocks and then dumped it on your head at the top of the market. So if you're wondering what's going on with your 401k, it's of course that artificial economy, which still does seem to be supporting many jobs. However, the cost of it is hyperinflation, right? This kind of very rapid rate of inflation, which makes having those jobs worth less. And so, the ultimate scam that has basically happened here is that more people are employed, more people are working. You're getting raises, and of course, you're just not getting raises fast enough to keep up with the cost of living, and all of that money, the difference there is actually in the pockets of those elitist, globalist, transnationalist billionaires who used all that those Fed like infinite free loans and the money printing, all of that stuff to buy back their own stocks and then dump it on your head. So there is a cost for everything. And that was one of the main complaints during the Trump administration, that why isn't the money getting to the small businesses that really need it? Why does it seem like Trump relatives are getting the loans? Why is it Trump's friends getting the loans? How come all these very, very rich people are getting stimulus and getting loans, and why are they buying back their stocks instead of investing in their companies in order to make changes that the world economy needed in order to support people, which all of this ultimately comes out of the pockets of the people? And so how did all those ultra wealthy people end up with so much more money? Billions and billions and trillions, 5 trillion to 9 trillion more dollars, in their pockets and floating around their systems, which they then dumped on your head. If you're looking at stocks and seeing your 401k go down, it's just because this was all pretty much a disaster, just a complete disaster. And so everyone is working more, right? Or they're just not coming back to work, right? So it's one of the two. You're either working more for less or you're not coming back to work. And so this is not exactly as robust as it looks. And you can see by consumer credit that look at this. It's almost doubled the amount of consumer credit that's being used. And that does contribute to inflation because, of course, debt is basically printed money. Any loan is printed money. You give your mother a loan, and you have just increased the monetary supply. Okay, so until that loan is closed, right? Paid back or closed, then basically there's more money supply out there, and so, all of this consumer credit isn't helping inflation, and it actually does indicate that regular people are using up their savings as they're compensating for inflation, which of course was used by the billionaires to basically buy back their own stocks and then dump it on your head at the top of the market. So none of this is looking very good. It does suggest that perhaps the Fed is going to have a big headache in September, and maybe we haven't seen the bottom of the market yet. But as for the summer relief rally, well, it seems to be going okay. At least in terms of a relief rally. The question is, are we going to drop down when the market realizes that the risk of recession can actually drag down earnings? Um, or is the market going to keep pumping as they think that the risk of recession is actually going to limit the Fed's hand in terms of increasing interest rates, right? So if the Fed doesn't increase interest rates as harshly, then the stock market can continue to just rise, just if the Fed just kind of starts backing off. However, that's not going to solve inflation, and right now the recession may not actually be factored into the stock market. So what we're seeing is just a kind of an exuberance in the market right now. You want to be very careful about these relief rallies. And you can see we have, a bunch of, poo coins that are actually popping off. And these aren't exactly the best investments, not all of them here. And while, of course, a lot of good coins did lead the rally, we're starting to see money going to a little bit sketchier stuff. And as money gets to sketchier investments, then we're probably going to be worried that this market may be turning around soon. However, we are still technically in those zones that I marked out, so I really don't feel the need to update this. But stay above 24K, and we still have a daily chance at a pump, but we haven't breached 24K yet, right? We're not even close to 24K, and so until we actually successfully hold 24K, I'm not going to feel good about any type of potential for a future pump. I'm going to think that this is an inflection point in the market, which could go either up or down. But 24K would get us reasonably assured that we're in a bullish, really bullish posture. As for right now, if we had lost a 23K, the shorter time frames would dump, and sure enough, we lost 23K temporarily, pretty much right after I made that video, or right as I was making it, we were just losing it at 22.9 or something like that. And then, sure enough, we dumped down just like I said we would. We lost 23K, and so we dumped all the way down to the bottom of this wedge. We broke out of this, this growth curve that we were in. And, what have we done really? We actually pumped at the bottom of this wedge, and we're basically coming back up to retest this growth curve. And, while you can fidget with it maybe a little bit, like something like this may take into account like a 2 points as opposed to 1 point. And then this can actually show you the breakdown and how we basically have retested it. That's not necessarily a bullish look, okay? Like a breaking down and then retesting something and then continuing to go down, that's not the best look. Now, what we do have going for us is that we also have this wedge, and so which one do I put priority on? Neither of them, actually. These are These are just mental tools to help you target entries and exits and, to just plan your trade. This type of a curve and this type of a wedge, it's really not important, okay? Only price action is important. So I don't really care about patterns. I care about what the price action is doing. And the price action is telling me that we need to get over 24K if we want to pump on, in one of these days. Like if we want to have a real chance at getting to those higher levels that we've all been talking about, then we need to secure 24K as soon as possible. 23K is not going to do it. We are going to eventually overstay our welcome in this area. And of course, if we're starting to break down, that's not a good sign. We've already tested lower than this previous low right here as we've worked our way down, and so we are making this broadening wedge as we break down. And that can be a little bit sketchy. It doesn't have to hold. The next drop could actually be quite scary all the way down to 22K. If we fall back into this wedge, we could fall down all the way down to 22K. And of course, we did bounce right on the top of that support area I gave you. So we had both the wedge and we also had this green support bar. And I mentioned that could be a potential place for support. So if we do lose 22 at any point, maybe the next place is going to be somewhere over here around 21,300. However, we are just in this kind of momentum zone where we still have a little bit of momentum on our side, and I probably could update this. Let's see. Yeah, maybe let's get on the daily here. So 23, let's say 250. Yeah, there seems to be a lot of agreement with the 23 250. So where are we? 23,200? Well, we're a little bit short. We're a little bit short of what would be ideal. And so, this window is getting quite narrow in terms of, what we should be holding on to. And let's see, what's an actual breakdown? 23,000, 23,000. Yeah, so that 23,000 is still kind of a bottom line for us, which makes sense. It was the bottom line before. So as you can see, our window of momentum is contracting to the downside here. And we basically are using the bullish momentum area as resistance, which is kind of interesting because, we didn't even get on top of it, not even temporarily. And so yeah, that's just going to keep coming down if we behave like this. And what you can find is that we may have just violated this wedge, or pardon me, this growth curve, retested it, and maybe we're in danger of breaking down as soon as we get past this triangle area. And I want to show you what that looked like before, just so you understand I'm not BSing you guys. Look here, like we had our growth curve, we broke down from it, we retested it, and then we started to break down again. And what happened after that, right? This is the key candle to pay attention to. This is the key candle to pay attention to. What happened after that was pretty nasty, right? It was pretty nasty, that fall. Let's go and see if there's an example up here. Okay, this one is a little bit less obvious just because of these blue candles. And also we had we had just kind of a wild ride on this one, but you can see that more or less, let's see if maybe the 12-hour gives us a little better perspective on this one. Let's see here. Yeah, more or less you can see it on this one. It's interesting. There we go. There we go. This one visualizes it pretty well. So basically we had the breakdown right here from that growth wedge. It came all the way down. It broke back up. It retested the wedge above where it broke down from. And then, of course, we had the drop. You see that? You see just how dramatic the drop was after it broke down from this wedge. So there's a little consolidation period after the wedge. And there seems to be, yet again, like this, in this case, it was just like a 16-hour candle, but there seems to be like daily candles, 16-hour candles that are just showing, like we're going to go down, right? And how about even over here at the height of the market, right? Where you can see we had this growth curve, right? All during summer, people were wondering, why are these wicks going down to these very specific price levels? And so I drew a curve underneath it. The curve actually led us up to this place where we bounced off of it. And then we bounced off again bullishly. Hard to be bearish under those circumstances. But look what actually happened, guys. What actually happened is we violated our growth curve. We actually came back to retest it above the violation zone. And then we had this, this consolidation area. And then we had very specific candles which we broke down from. In this case, this was months and months and months of price action, so of course it took several days. But you guys can see this pattern that Bitcoin is putting in, and most people aren't going to show you this stuff. Like a lot of people are actually criticizing the way that I make this analysis, but it just has worked time and time and time again. And so is it going to happen yet again? Well, that's the danger here. That's the danger that we're watching out for. And so, guys, like when I say that, lose 20K, like we really are in serious danger there. When I say lose 23K, that's going to be on the retest basically, right? Because we've now got the retest of this growth curve. And if this breaks down, it's going to be a big failure. And we're going to really have to push. I think you can visualize this. We have to push all the way up here back to 24K in order to reclaim our growth curve, right? And continue that bullishness to the upside. And yeah, guys, so basically that's your update for the day. I don't think we need to go over too many more details, but just be aware that, a lot of coins may be popping off right now, but it can be kind of a false signal. It can be just a lot of coins trying to get in a little bit of profit, trying to squeeze something out of the market before the market goes down. And just to kind of sneak this in. Let's just go ahead and double check what these markets look like. Of course, we could be having, the Dow Jones, coming here into a highly resistant area, right, where it's broken down in the past. So, there's a very big likelihood that we could break down again here. Of course, we could pop up, but, you know, obviously, if it sold really hard right here, why wouldn't it sell hard there again, and at least up here? So it's hard to imagine us breaking these limits. My box is a little low there. It's hard to imagine us breaking these limits, and so there will be an end to this market sooner or later. You go over to the Russell, and the Russell is doing some amazing stuff. This is the one that's kind of confusing the market, but even so, we have it, basically pushing into a resistance zone here. So we are on rejection watch, right? We are on rejection watch to see if we can get this candle over here around 193 and see if we just get sent back down. And then whether or not we capture that breakout of the wedge. S&P 500 basically doing the same thing as the Dow Jones, getting into this resistant area and not really being able to push through. So does that suggest a possible breakdown soon, or can we get to the next level and then perhaps break down after extreme exhaustion? Going over to the NASDAQ, I can see that basically it's the same setup. And so the majority of these indices are suggesting that we are basically topped out and that it may be time to do a retrace or to head back down. And so that's why you can see a lot of poo coins, a lot of altcoins, are just starting to pop off. A lot of those, those coin armies, et cetera, the investors, they're trying to entice you to perhaps get into them so that they can dump a little on the market and perhaps de-risk. And so a lot of people may be suckered into buying just a lot of altcoins right now, when in fact the market could be turning around to the other direction. That's not confirmed yet. This current global economic environment is extremely messy, but we'll be watching out for that. All right, that was your alpha for the day. Stay safe and happy trading.